Recently, we helped a bank with their FDICIA implementation. They'd hit the $1 billion threshold, but they just weren't sure how to go about the whole process to make sure that they met those audit requirements. So we were able to work with bank management and the external auditors as a team to help them through that first year FDICIA audit implementation. There are several tips that can help banks when they're getting ready for their first year FDICIA audit. First is to start early. Banks generally have pretty good controls in place, but there's always tweaking and reworking that needs to be done. Next is to develop a risk assessment. I know that banks have risk assessments coming out of their ears, but this one has to focus on the financial statement risks because the banks are going to take that risk assessment and use it to document their significant control processes and identify the key controls that they're going to test. Next, the banks are going to need to test those controls. They're going to need to rework them, and they're going to retest them. There's always modifications that need to be made during this process. And that's because you get in there and you test a control and it doesn't work exactly like you thought, so you've got to modify either the test to meet the control or you've got to modify the control. One of the most significant modifications that we see is related to documentation. In external auditing and public accounting, we hear all the time that if you didn't document it, you didn't do it. And banks get into a little bit of this issue when they're trying to get ready for FDICIA. The last tip is to make sure to get the external auditors involved in the process early and keep them involved throughout the whole process. And this is because they're the ones that are going to be issuing your audit opinion, so getting everybody on the same page early just helps the process go smoothly.